Yeah, very good, very good. Listening with interest on Julian's take of things. I'm pretty much in step, but there's a few things I've got a slightly different opinion on, which I will bring in here. And I'm going to start with the charts this week, and then we're going to look at the COT data and see why I've got the opinion I've got. And I'm starting with gold. Gold is in a downtrend, so we're looking at the weekly here, and the COT data is correlated to the weekly price action. So, looking at the weekly chart, we are in a downtrend with gold. Last week's bar is showing us that the market did pause, and this is a particular bar that could go in either direction. So it could explode to the upside, or it could still move to the downside. And I'm still unconvinced about the gold rally. And I'll bring in why I think that in a moment. So gold is, as I say, in a downtrend, and until it starts to break through really the top of this bar and a little bit beyond, then I'm sticking with that particular side of the argument. The really interesting charts I think at the minute are really exactly what Jules was saying about the indices, and I completely agree with him about indices. And I think the term he used about grey clouds rather than black clouds, I think, was quite poignant, because there's a bit of a lack of messaging really going on. This is the NASDAQ, and the NASDAQ, yes, has hit a bit of a blockage up here. But the pattern I've got just kind of stretches up a little bit higher. So I think the NASDAQ could get up to somewhere around about 14,500 before we see a more significant move to the downside. But that doesn't mean that I'd like to buy it to that point, because I think the NASDAQ is probably starting to lose steam up here. And the reason I bring the NASDAQ up more than the S&P is that I think the NASDAQ probably will be the one that suffers the most. I think that Biden announcement of a tax hike is probably more likely to affect this market than the others. So I'm interested in shorting, and I'm interested in shorting the NASDAQ, but I'd really like to see 14,500 first if possible. But that doesn't mean this area is out of options. I may well take it here, and this is where it starts. The message starts getting a little bit more interesting when we look at the VIX. Now, the VIX is more in relation to the S&P because it is the S&P volatility index, but as I say, when it comes down to the companies in the S&P, the ones that I think are going to get more exposed to things like a tax hike are the companies that are in the NASDAQ. They're NASDAQ companies. So last week, yes, we tried to get a rally going, but it failed ultimately. But 2 weeks ago, we had this really lovely engulfing bar. Now we'll flip over to the COT data, and we're going to look at the NASDAQ, we're going to look at the VIX, and we're going to look at gold, and see if we can build an argument. The VIX, first of all, let's have a look at the VIX. So with the COT data with the VIX, we just saw a little uptick. Now, all we've got, the reason I think that Julian's comment about grey clouds rather than black clouds is poignant is because the message at this stage is not extreme. So it's not really shouting anything specific. All it's giving us is just little pieces of piecemeal, really, that we can possibly grab onto and see if we can deem some kind of information and some kind of bias from. This ticking up just a little bit on the net longs just says to me that people are getting a little bit nervous. Now they're not all out and out panicking right now, but they're getting a little bit nervous. So this is the net buying here, and this is the index. And the index is falling down to the lower scale. Now the lower scale would normally suggest a sell-off, as it did here and as it did here. So when we see the index at the lower end here, we see a sell-off. We see an index at the lower end here. We tend to see a sell-off. I shouldn't say we see a sell-off. We tend to see a sell-off. We see at the high end here. This suggests buying the VIX. So this is getting around about the 50% mark here. So we'd want to see this start to move in the opposite direction. But it's slowing. That's the significant thing here, and the net buying is just starting to pop up. Now, if we look at the NASDAQ, this is the E-mini on the NASDAQ. There's the price action up there. And we're seeing the buying on the index below this 50 line. So it's below the 50% line, and it's just dropping off a little bit, not massively, but just a little bit. And as I say, I'm just trying to garner some kind of hint of what might be happening here. There was a little uptick in the selling there, which is all this is suggesting, that we're a little bit early to actually get a genuine directional bias here. It's just saying, be a little bit careful this week, because volatility may well pick up. And it could be a really good environment for day traders, but not necessarily for people that are going to be holding longer term. And this is gold here. This is gold, and the index is floating around this 50% mark. So again, not extreme enough for us to get any kind of idea of which way the gold market is gone, but it's just a little bit negative. When we look at the selling here, yes, those commercials are always ultimately selling, but we look at the selling here, then there's some open water between the buying and selling, and we just see just a little bit of flatlining there with the buying. So it's saying that if the gold market is to pump from this point, then it's probably more likely to be retail traders, which means that there is a lack of liquidity, and it means that we need to be a bit more careful when we are trying to pick a longer term move in gold. So it is possibly a good scenario for day traders for the coming week, rather than people that want to try and take longer term positions. If we then look at some of the other possible indicators, the yen has seen an uptick in the commercial index here, which is certainly suggesting that any nervousness is possibly going towards the currency, this currency, rather than maybe towards gold as a potential protective asset. So we might be looking at the yen as their protection asset rather than gold. And we're still seeing the buying quite nice and healthy. There's some open water between the buy line and the sell line here, between the yen and between the yen buying and the yen selling. But we're not seeing a massive uptick. So again, it's not showing us that if we take a longer term position, we are likely to get just chopped around a little bit before it becomes a bit more defined. And the seasonal chart on the yen shows us that we do potentially have a nice long run to the upside to around about November. So it could happen at any time. It gets a little bit choppy over the next few months, but it looks like that position could start to build in yen longs. And we should look at the Aussie dollar, because the Aussie dollar, as Jules was saying about the Kiwi, Aussie's very, very similar. It's commodity based, and it's going to be to do with the exports. The Aussie dollar has still seen some potential buying, but the index is very, very low down here. So there looks like, and this is more of a kind of like, an overview of what's the general mood in the market right now. And the general mood appears to be that people are non-committal, but they are probably protecting their positions right now, and they're protecting their positions by the looks of this, with going towards the yen and maybe cutting back on some of those growth insinuating currencies like the Aussie, and it would be the same with the Kiwi as well.
Cheers, Ash. Thank you very much for that. Much appreciated. It was good to have a look at what the data